If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started. This is the Think Generational Wealth podcast with your hosts, Amir, Estimo, and Jimmy Jean.
Yes, sir.
So today's topic, we're going to touch on taxes. Jimmy, would you like to give a disclosure regarding this topic?
Disclosure. Remember, people, this could be my opinion. This is not any advice, okay? You can take the information. What you choose to do with this information is up to you.
Okay.
But I'm not giving no advice because I'm not no advisor, okay? It's just any informational topic that anybody will speak about. Now, it is up to you to use the information wisely or to use the information against you.
Okay. All right, cool. Thank you very much, Jimmy, for sharing that with the audience. So let's go ahead and jump into this topic, taxes. So, Jimmy, lead us in, man. Let's go. Let us know what you got for us.
Okay. Taxes. Taxes very, very broad. Whenever you hear the word taxes, a lot of people don't even want to talk about stuff like that. Okay. But you have to understand, taxes play a big role. It can make you or it can break you. Why do I pick those two collateral to describe taxes or to describe it in a way where it can affect somebody? Yes, taxes. When you look at it, they use taxes to build the city where you at or the state where you stay in.
Okay.
They use that money, right? They use the money that we pay in taxes to build certain roads. Certain light poles or highways or certain buildings. To put jobs in the area, to get uniform officials jobs so they can supposed to be protect us, but it don't always play that role, as we know.
Okay.
A lot of time, us as individuals, we pay so much in taxes, but don't get what we're supposed to get back. Sometimes it could be cause a lot of in areas because that maybe the individual don't know what it is that they doing as a write-off, or if they don't have any business mind or don't have any business structure.
Okay.
In that case, you're leaving a lot of money on the table. You know what I'm saying? Now, when I'm saying a lot of money on the table, I'm not referring like money you can put in your pocket, but also money you can be saving from paying taxes. And if you look at Amazon itself is one of the richest company, right?
Yes.
One of the richest company. They don't pay a dime in taxes.
No, they don't.
Okay.
Yep.
So these people, they know strategy. They're all very business minded. They know how to do different type of write-off. They know what to pay. More of in order for them not to be paying taxes. So a lot of people say, "Damn, taxes. Why? I pay so much taxes." Well, you pay so much taxes because you choose to pay so much taxes. Know what I'm saying?
Yes.
Because if you learn the fundamental of taxes, how tax work, then you will learn how to not pay so much in taxes. Now we're gonna talk in that case. 401k gonna fall in the topic. Simple IRA gonna fall in the topic. Um, 403b gonna fall in the topic.
Okay.
They say all those things is tax shelter. Not really, not really, because whenever you're putting money in those mechanics, right?
Yep.
You don't pay any taxes at first. This is what it gets you. But when you go take the capital, you paying taxes on the whole. So, Admir,
Yes.
answer this question. If you had some money, right?
Mm-hmm.
You was getting ready to invest. Would you pay taxes in the capital or in the gain?
Um. Okay. Well, that's a pretty good question. So, you definitely don't want to. You want to pay taxes on the capital, not on the gain. Um. Yep.
Exactly. Exactly. Because why would you want to pay money on the capital instead of the gain? Think about it. You coming with
Mm-hmm.
$30,000, right? Later on, you leaving with $80,000. Now you paying taxes on
Yep.
$80,000, not the
Yep.
$30,000. See, you have to whenever you going to do something in the future, you have to plan. You have to have a strategy for those plans, and you have to do your due
Mm-hmm.
diligence. You have to understand where you put your money at. Cause man, listen, I do people taxes that have 401k and go pull out, and guess what? Almost like 30% of that money is not for them.
Mm-hmm.
Have to pay taxes, and what I'm saying, by the time they withdraw or whatever they were doing roll over, they paying so much taxes
Mm-hmm.
on that money.
Mm-hmm.
Right? Then again, we're gonna have to bring in the non traditional investments in the game too during this tax conversation, because non traditional investment, you're not paying no taxes on no gain or 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 on the capital that's put in, because it's already pre dollar
Yep.
tax already. See what I'm saying? So in that case, when we hear of non-qualified, people like feel skeptical. It's not qualified. It's not through the state. So I'm scared. I'm gonna lose my money. So these people, man, really hurting themselves when you do that, because non-qualified give you a lot of tax
Yep.
advantage. It's giving you tax shelter where your money is protected, just like in the bank. It's probably more protected. Well, it's actually more protected
Mm-hmm.
than the bank, because not nobody can sue you for a non-qualified plan if you have your money in a non-qualified plan. Can't nobody touch that money, not the government, not even the government. All right. But anyway, what I'm saying, let's get back to
Okay.
tax. All right. You have to know certain area in tax. You have to know certain schedules when it comes down to doing taxes. Why do I say that? Because those schedules is the ones that's gonna give you so much ability where you can do write off where you don't have to pay much in taxes. That's what I mean. I'm saying a lot of people, pay taxes at their job, then go put money again somewhere else, and they pay
Mm-hmm.
more taxes. I'm saying they sometimes they taking that money and stuff, and put it in a different instrument, and they have to pay more taxes, more taxes, more taxes. People get tired of that. But once you know the tax gain, once you know the tax information, you can use that tax information and do write off, where whatever tax you're paying, you can get at least a great amount of percentage back and return in
Yep.
your pocket. So it's very strong that uh, you teach your the generation that's coming up, or your kids, about taxes. Not be scared when they hear taxes. They think Uncle Sam is coming for them.
Yeah.
No, that's not the
Okay.
case. You know what I'm saying? As long as you stay in the IRS guideline, as long as you stay in the IRS guideline, you are good. I'm saying you are protected. You don't have to
Yeah.
worry about nothing. I'm saying. So I'm gonna kind of end it here for the tax information. But if anybody have any suggestion or need help about any taxes information, I can
Okay.
guide them. I'm saying I can help them with whatever they have in mind. So in that case, we're gonna stop it here. I'm saying it is more to the tax game. It is more to the tax business. It's not just what I just said. I mean, it's so much stuff to learn. It's just like anybody, any field, right? You have little breakdowns. You have little levels. I'm saying they have tax bracket. And different people meet different tax bracket. For example, let's say you're making 9,000. You only, I'm saying, you in the 12%
Okay.
bracket. If you're making more than um, um 12,000, you, let's say more than 9,000, you at nine. Let's say you at 901. Now you in the I'm sorry. Let me say that again. If you're making 9,000 and down, you're in a 10% bracket. If what I'm saying, making 9,001, now you want a
Mm-hmm.
12% bracket. I'm saying, and, self-employed have the different bracket. LLC, I'm saying, let's say you're making over $500,000, now you want a different bracket. You're looking at, I'm saying, 20 to 25% bracket. So, and also in the same case too, you're still getting some tax treatment too, since you're a business owner. You know what I'm saying, so all those have different codes, and all those have different way and schedules that you can use to bring your tax your liability down. You know what I'm saying, you also, there's something called tax
Okay.
deductible. Tax deductible is what you can use to lower your tax liability down if you have a lot of expenses for the year. All right, so it's a lot of concept with taxes, and I would love for any young folks or anybody that urge to learn about taxes. If they want to learn, you know what I'm saying, I would urge them to push on their behalf to gain that information, because that information is very wisely. I'm saying, so like I said, I'm gonna
Okay.
stop here. If anybody have any tax question, they can hit me up at TJ Think Generational Wealth, TGF. I'm sorry, TGWealth at gmail.com. That's TGWealth at
Okay.
gmail.com.
Jimmy, appreciate it, man. You brought some valuable stuff. Some good takeaways I got out of that was the non-qualified plan. That's something I want to look up a little bit more.
Mm-hmm.
Obviously, you hit on the 401k. IRA is another one. I remember about a couple years ago when I took some time off from work. I was transitioning between careers. I basically lived off my IRA. It was amazing the fact that I'm like, man, I worked so hard to build up all this capital, right? And then you turn around,
Mm-hmm.
you take some money off, you take money out, and then they'll tax you on top of that. So that was very disheartening to see that. So that's I'm
Mm-hmm.
glad you touched up on that. Tax deductible. I'm glad you brought up Amazon. Amazon, I remember in 2018, uh,
Mm-hmm.
2018, Amazon paid nothing in taxes. They paid zero taxes, federal taxes. So if anybody
Exactly.
want to go look that up, go look up Amazon, research Google Amazon zero taxes 2018. So just like Jimmy said, if you have more questions, this is just very basic, not too detailed podcast about taxes. I don't know how it is in the Western Hemisphere because we do have some listeners over there too. It could be different, so please consult your country and rules and regulation. This applies to the U.S., may not apply to another country. So, like Jimmy said, if you have any more questions, hit them up at Think Gen Wealth